the market action today. Joining us now, Vital Knowledge founder Adam Crisafulli and Patrick Fruzzetti, managing director with Rose Advisors at Hightower. Guys, good afternoon. Patrick, investors expect a 25 basis point cut from the Fed coming up, but economic activity, labor numbers have been coming in warm, if not hot. So how much risk do you think there is to stocks, not just around CPI itself, but the possibility that after December, there might not be as many cuts as investors are pricing in?
Well, the market certainly stretched to this point. And I think, with CPI coming out tomorrow, PCE later in the week, that'll certainly give a better indication of where we stand in regards to inflation, at least at the present time. But, the market's, it's very benign macro backdrop, as you said, both monetarily and fiscally. Financials are performing pretty well, which is always a healthy sign. So, going into the end of the year, I think, could very much be positive, but so much lies on future policy decisions going into 2025, whether it relates to trade or other fiscal policies and and immigration policies, of course.
Right. Adam, how much of today's action is the flip side of what we saw about maybe a week ago? The downside on Oracle versus that upside on Salesforce.
Yeah, I think definitely tech in the very near term is facing a very high bar. We're coming off a week last week, like you mentioned, of pretty blowout earnings reports, Salesforce and Marvell being the big ones. Oracle's bar was almost impossibly high. It's hard to say that fundamentally the company is really performing poorly. Management on the call was as bullish as ever, but the bar is very high. We're going to hear from two more big reports this week with Adobe Wednesday and then Broadcom on Thursday. So tech, it was kind of a weird session. Tech was very strong out of the gate and then faded very hard. And then you had kind of the equal weight S&P, which was extremely weak out of the open, rebound a little bit off its lows. But yeah, definitely tech facing a very high bar. The macro environment, we heard from a bunch of financial executives today at the Goldman conference, and all of them pretty much across the board were pretty optimistic about what they're seeing on the ground as far as just strength of the consumer, corporate health, et cetera, corporate optimism, which is becoming more bullish into next year, especially on the M&A front. You had two big deals get blocked today. One of them formally blocked, the other one speculated. Corporate America is very hopeful that the Trump 2.0 regime will have a more permissible M&A environment. So that's one of the big drivers of corporate optimism.
Yeah, and that's something we're going to be talking about a little bit later this hour, and perhaps more questions than answers still on what that policy is actually going to look like under Trump 2.0, although, as you mentioned, a lot of optimism. Patrick, what are financials signaling to us as you do look to 2025 and parts of the market that look attractive, especially given the fact that under the surface there is a lot of churn? I mean, look no further than the equal-weighted S&P and some of the pullbacks we've seen in certain sectors and certain areas of the market that are not big tech right now.
Yeah, well, look, when I look at the market, I think you can always find good companies, good businesses to invest in. And I'm not talking about trading. I'm just saying looking at over long-term cycles. And you'll oftentimes get opportunities. And take, case in point, whenever there's headline, a comment in the headlines, take, for example, when Trump came out and said, we're going to institute tariffs with Canada and Mexico beginning on day one. Well, you have to look at the probability of those things really happening, or is it more just rhetoric and potentially used for future negotiation? And, one company that we own is Canadian Pacific. They own all the rail line down from Mexico through North America up to Canada. And I think they'll be big beneficiaries of deglobalization, something, frankly, that Trump supports. And if they, get through any of, these talks around tariffs, I think they could be a huge beneficiary of nearshoring and onshoring, and they're at a reasonable valuation. So there's names like that, I think, within the market. Even if things, certain sectors are seemingly overpriced, I think you can always find good ideas, and that would be one, I think, pretty good example that we've taken advantage of.